Guys, I'm revisiting Gibson Energy Inc. GEI, Toronto Stock Exchange, and that one has just got all the little alarm clocks, all those little clues. They are all popping up at the same time, so I'm deciding to do another podcast on GEI. I did one a little while back when it was still in stage 1, trying to identify breakout levels. I did another one when it was breaking out, embryonic breakout, and now it's a full-fledged breakout in progress right now. Gibson Energy, get it while it's hot. All right. Here is my monthly defined bottom, more conservative, tighter formation. I had a close above that important breakout line at 1915 last month, and now it just exploded past that. And if next week we close above, unless there's some crazy action, it closes back below 1915. This is a confirmed stage 2, even on the monthly, the higher time frame. I have a few targets here. Here's the most conservative of targets. And after that, bigger targets encompassing using the bigger pattern added to breakout line. And then you have the most crazy of the targets. Whoa. But the point is, since we're doing stage analysis, Stan Weinstein, it's always positive to have confirmed breakouts, whether you take the shortest one, the closest one to the breakout line, or the further ones away. They're in the direction that you want to go. They're going upwards. The 12-month moving average is angling upwards. There's no, you're getting out of overhead resistance right here. You might get into some here around the 23 level. Previous support, now turn resistance. And then after that, you're going to run into resistance all the way up here to 27.75. And after that, 36.52 previous highs here. But that's all right. What you're going to do, you just want to make sure you're in the trend. You want to make sure you're in an explosive trend. Get ahead of all that buying that's going to come in, that's going to help propel the stock upwards. And Gibson Energy, guys, if we look at the Stan Weinstein on the weekly. Ooh, let's check it out. Remove all trend lines. Look at that, stage 1. Tried a few times to go out. Came back in. I'm not sure we had a monthly defined breakout. Remember, you want the higher time frame to be in your favor to avoid whipsaws. Came back in, but now we're closing above the monthly defined breakout levels, guys. It did that last month. August 6th, September. Yeah, with this close here, it's still closed above the monthly defined breakout line. And now what we have here is a classic Stan breakout. Increasing volume, not that much. So that might have explained why we didn't get in now. But right here, if ever you didn't trust that volume here, it broke out. It pulled back on contracting volume, which is healthy. And then after that, we get the volume we've all been waiting for. So that's the patience. You don't want to get trapped. You want to see that volume decrease, even if you didn't have, if you didn't trust that volume here, even if you start outperforming the SPX, crossing over the 0 line, very positive. 30-moving average angling upwards, price above the 30-moving average, above the Ichimoku cloud, above the monthly defined breakout line. Even if you had all those and you still wanted that volume confirmation and you didn't trust that because it wasn't twice the average of the previous 4 or 5 weeks, well, you wait. And what's great about waiting is that pullback on contracting volume confirms that the uptrend is on its way, guys. Nobody's dumping. Contracting volume increasing on the up days, and the 3-moving average is angling upwards more and more. So this is awesome, guys. somebody who could have decided to enter here on this green candle on the pullback close to the 30-week average, lower risk to reward ratio, close to that breakout line right here, confirmed with the V here. See, pullback and then bounce off. That confirms that's the V shape, the bottom. But if you didn't, right here, you have another one right here. So that's the weekly confirmed breakout right here, Stan Weinstein style. You could enter here. After that, I'm pretty sure it's going to keep going up. And, well, don't know. Can't say pretty sure. What if it goes up? Then after that, classic action, bounce back up. So we will probably have a pullback close to the 20 area. So if your sell stop, if you enter here, make sure your sell stop is below 18, below the low of here. Lows, you shouldn't have lower lows in an uptrend. You want higher highs and higher lows. So you could put the sell stop all the way here. That means if the price action goes back down below a previous low, then you don't want to be there. That's if somebody asks you, well, when don't you want to be in the stock? When do you want to get out? Well, that's it. If you have a lower low on the weekly, as confirmed with a V-shaped on the Mansfield indicator or any type of indicator which shows underperforming and then going back up, you don't want to be there. So the sell stop, that's a safe place here. It's a logical place. You could put it up here. If you put your sell stop here or under this candle here, well, the price action can go back down probably close to this area, penetrate through this resistance, which is now support, with the long wick going down, and you could get triggered out. But even the long wick should not go below the previous low. Not a good sign. And you'll probably be out by that. You want to be out by that moment and reevaluate the situation for a next signal. So that's pretty cool for that. I looked at Gibson. Let's say we compare it to its sector. The energy sector outperforming. Symbol info, sector energy. Then we're going to go check the industry, oil and refining. And look at that, outperforming. Same time as that its breakout, that it was outperforming its sector, pulling back, and then continuing to outperform it. Let's go compare it to oil. Oil refining. And what's pretty cool about that is you're crossing over the zero line. You're underperforming your industry, a subgroup, and now you're starting to overtake, outperforming. So this falls, instead of being a laggard, it becomes it falls with the leaders. And that's where you want to be with, man. You want these stocks changing cycles from laggards to outperformers of its group. Very positive. So all these things are in lining for Gibson Energy. Technically, horizontal breakout line. There's not much. I'm trying to find reasons not to enter. Some doubt, but right now it's looking pretty stage 2 confirmed, on the way to who knows where. You had those monthly defined break targets that we identified in the beginning of the video, but that's the beauty of the stage analysis and Stan Weinstein is you're going to ride this for as long as the chart, for as long as the chart tells you. So if you have these motions here, if I keep doing my little doodles, and then you go sideways, go down, go back up, down, as long as and this is the 30-week average, as long as the lows, this is where you move your sell stop. As long as you don't have lower lows, then you're in an uptrend. There's no reason to sell. You keep riding it up all the way until it starts topping up. And if ever you don't want to exit because there's a tweezer tops or you're still getting emotionally, well, worst case, when the price action goes back down and it pierces your previous sell stop that you had below that low, then you're out. I have a few podcasts, the earlier ones in the Secret Wars episode. Go watch them. I go in detail about how to move your sell stop, the investor's way, the trader's way, how Stan used the trend lines For him, if valid trend line had three points, 1, 2, 3, and a break on the fourth, he would take half his position. And these were warning signs that the stage was dwindling, might go into a stage 3, might drop right away in stage 4. It's just time to get out. Don't get attached to Gibson. You'll love it. Yeah, you convince yourself, great company, whatever. But when it's time to get out, even the best ones have cycles. All stocks have cycles. Move your money to other stocks that can give you better performance, better return for the time that you invested your NAV in it, guys. And that's pretty much it for Gibson, guys. It looks pretty nice, right? Don't hesitate to subscribe, like, comment, review. And I'm going to keep trying to pound out these podcasts, always choosing better and better stocks, more and more ready to explode. So we get some good performance, guys. All right. Thank you. Ciao, guys.